good, YouTube? It's your boy, Devin Payne. Welcome to this week's video. Hey, look, I know that 2021 is the year that a lot of people are looking to become first-time home buyers, and I happen to dabble a little bit in real estate investing. So I wanted to make this video so I can provide you with 5 tips to assist you on your home buying journey. Buying your first home can be an extremely overwhelming process. There's a ton of paperwork with a ton of unfamiliar terms and a lot of percentages that are just thrown around. But in the end, when you finally close on your first home, it's an incredibly rewarding feeling, and I want that for you guys, which is exactly why I drop videos just like this one every week, helping to either supplement what you may have learned in school or straight up teach you things that you wish that you would have learned in school regarding all things personal finance. These are things that I personally wish that I knew when I closed on my first home. So be sure to stick around for the entire video so you won't miss anything. Now, let's get this video started. The first tip that I have for you is to know the mortgage options available to you. Depending on your situation and depending on the type of home you're looking for, you could be eligible for a variety of loans. But for this video, I'll just hit on the 4 main categories of mortgages: conventional, FHA, VA, and USDA. Now, in case that made 0 sense to you, don't worry, let me explain, I got you. Now, a conventional loan is by far the most common, so you've probably heard this one thrown around a lot. A conventional loan is just a loan that's not backed by the government. It's issued by private lenders or banks. Because this loan isn't insured by the government, it's viewed as a riskier investment on their part, which is why you can expect to have to produce a higher down payment than that of other government-backed loans like the ones that I mentioned earlier. Typically, for a conventional loan, you can expect to have to produce a down payment of at least 15 to 20%. This provides the lender a feeling of reassurance that you're less likely to default on the loan because you've invested more of your own money into it. In most cases, you need a credit score at least in the mid 600s to be eligible for a conventional loan. However, having a credit score over 740 gets the lenders really excited to have you, and who doesn't want to feel wanted? They begin to bend over backwards to have you, offering you rebates and incredibly low interest rates. So it is in your best interest to have the highest credit score possible when applying for a conventional loan. The FHA loan is next up, and it stands for Federal Housing Administration. Like the name suggests, it's backed by the Federal Housing Administration. This loan was established around the Great Depression, a period in time where many Americans could not afford their home, and as a result, they defaulted on their mortgages. Given the state of Americans at that time, meaning how they had virtually 0 savings and credit scores in the 500s, this loan was relatively easily attainable, and that still holds true today. The minimum credit score to be eligible for the FHA loan is a 500. However, if you have a credit score of at least 580, then you could potentially only be required to put 3.5% down as a down payment. Now, I won't go too deep into the loan breakdown in this video, but I feel like I'd be doing you guys a disservice if I didn't let you know now that because this loan is generally riskier for the lenders and banks, interest rates are usually higher, and you can expect to be charged a PMI or private mortgage insurance. Next up is the VA loan, which I also won't get too deep into in this video just because not too many people are eligible for it, but this loan is insured by the Department of Veterans Affairs and is available to active duty military members and veterans who meet the minimum active duty service requirement. Depending on when you serve, the service commitment changes, so be sure to inquire about that if you think you're eligible. Upside of the VA loan is that it's no down payment required, they provide bomb interest rates, and there's no minimum credit score requirement. However, the lender can require you to have a minimum credit score, so just be prepared for that. Not too many people actually know about the USDA loan, but it's a loan insured by the U.S. Department of Agriculture, which requires no down payment. But you still may be required to pay a PMI, just like in the FHA loan, so be aware. You could be eligible for this loan if you're looking to buy a house out in the country or even in the suburbs. Like I said, not too many people know about the USDA loan, so the people who did know about it previously may be pissed now that I told you about it, But whatever, I'm giving out free game over here. So just ask different lenders about it to see if they offer it. Now, the second tip that I have for you guys today is to build your credit score if you have a strong one, or to fix your credit score if you have a bad one. Now, having a good credit score is something to be proud of, and it gives you a lot of clout when it comes time to buy a house. Getting your credit score to mid to high 700s and even up in the 800s allows for you to shop for some of the best interest rates out there, and this allows you to pay on your principal sooner. Just because your credit score isn't where you want it to be at right now, or let's say it's been bad for a long time, that doesn't mean that you're forever out of luck. There are ways to almost immediately fix your credit score for free. I actually created a video on 6 ways that you can quickly start to fix your bad credit score. And that video is linked in the description below and it's tagged right here. So be sure to check that out if you haven't already once you finish this video, and share it with a friend if you think they can benefit from it. The third tip is to save, save, save. There's almost always something that will be unexpected when you're buying a home. Let's say that you qualify for a little to no money down loan. You still have to consider closing costs. You still have to assume that something won't work once you finally bought it. You still need something to sleep on. You can expect to pay about 3 to 5% of the home's value in closing costs. Now, closing costs are just a bunch of miscellaneous things that you don't really think about during the home buying process, like real estate profession fees, loan origination fees, processing fees, appraisals, title insurance. Just a lot of stuff that you're probably going to roll your eyes at. Mostly unavoidable, but at the same time, you can also see if the seller is willing to cover some or all of the closing costs. It's always nice when they do that, but like I said, at the end of the day, there's almost always something that's going to be unexpected to come up. So just make sure that you're saving ahead of time for that. Now, the fourth tip that I have for y'all today is to get pre-approved for your mortgage. Having a pre-approval letter is one of the most surefire ways to ensure that you're taken seriously, because this isn't window shopping anymore. This is,
wow, maybe Linda isn't wasting my time. She's already started the mortgage application process and has been offered a specified amount of money by her lender, assuming that her financial situation doesn't change.
When you're pre-approved for a mortgage, the lender has already pulled your credit report and verified your assets, income, and debts. I'm telling you this because I've made the mistake of shopping around without a pre-approval letter, and I've been left on red and missed out on some pretty good houses because I thought that just having the money was enough. It wasn't. The fifth and final tip that I have for you future home buyers today is to stick to your budget. Now, before you dislike this video and leave me a hurtful comment saying something like,
well, duh, why is this even a tip? Who does this idiot think he is?
Let me explain. Sometimes a lender will pre-approve you for more than you originally planned to take out, and this could lead you to feel pressured into buying a house that you weren't really budgeting for. Now, you're putting an offer in on a more expensive house. This more expensive house has other people that are interested in it. They outbid you. Now, at this point, you're fully invested in it. It's personal. You're all in. So you bid higher, and that offer is accepted. And now you're stuck with a more expensive house. And on a more expensive house, you have to consider higher property taxes. You have to consider higher closing costs. You have to consider higher insurance. Just because you're offered a specific amount from the bank doesn't mean that you have to take all of it. It would be a pain if this house was truly out of your budget and now you can't afford to live. So guys, those were 5 things that I wish that I knew when I bought my first house. There's just so much that goes into buying a home, especially when it's your first one, that it can be overwhelming. So I'm hoping that all these tips made sense and that they were beneficial to you. If you made it this far into the video and you're not yet a subscriber, I hope I've earned it. Be sure to like the video, subscribe, and turn on notifications so that you're notified whenever I post a new video. I'll see you guys in the next one. Stay safe. Be easy.